process to play out. And that's why it's stable, because that stable money is pushing it. Over here, we have our 30-minute chart. This is a great pairing, 30 into the daily. A lot of our traders at ATS use this. It's one of my favorites. The 30-minute represents the framework playing out inside of this daily chart momentum. And you can see we have our three market phases. We have our contraction, we have our expansion, we have our trend. And if you don't know what I'm talking about here, this is called the master pattern. I went deep on this in video 2 of this masterclass. I would suggest you go take a look at that if you don't know what I'm talking about here. But these are the three market phases that the market is always going through. Now, I want to draw your attention to this section right here. You can see we have our contraction phase of the market. As it expands, it starts forming an uptrend. This is where a lot of traders really get messed up because they're not being disciplined to trading in a directional bias based on a higher time frame. They see this, they start drawing their trend lines, and they start trying to trade thinking it's a bounce. That's a big mistake, trying to buy something like this. You have to recognize this is part of the three market phases. You need to understand that overall the market intent is going down based on the higher time frame. This all becomes an opportunity for you to sell short. And here's the magic with this, is as traders are getting sucked in thinking that a nice uptrend is forming, that creates what? It creates willing buyers in a market that clearly has momentum to go down. That's the ingredients that you need to make a good trade. You have traders that are making the wrong decision here, trading against the higher time frame momentum. You know that you're getting a good deal because you're positioned above fair market value. So this area from here down to here is a very, very high probability trade for the market to revalue to a fair price in the current trend. And then once you get through that, you get that extra profit there from the trend phase. But we're always just trying to get from here to here. That's your money in the bank. A lot of traders are not disciplined to directional bias. Therefore, they will miss out on the best entries, and they'll also be in the wrong direction. And that's going to create a lot of losses, and I definitely don't want that for you. This idea aligns closely with market microstructure research published by the CME Group, which documents how price seeks liquidity and balance inside dominant trends. So the rule becomes simple. Higher time frame trend and context plus lower time frame value equals probability and understanding for your trades. So now you're starting to see just how important it is to accurately define directional bias. You're probably also wondering, how do I even define directional bias correctly? I'm about to teach you. Here are 3 practical ways to determine directional bias. First, Heikin-Ashi candles. They smooth price action and reduce noise. They're excellent for identifying sustained direction and cutting out chop. The trade-off is less candle detail and a slight lag. But for directional bias, they work. I use them for years. Second is moving averages. Use these with caution. They rely on settings, and anything with settings can be optimized or over-optimized, and anything optimized can fail when conditions change. That's why I don't rely on them heavily. Still, better than nothing though. The third way to track directional bias, which is my personal favorite, is through inefficiency tracking. And so we have 2 different ways to track inefficiencies in the market. Number 1 is very popular. A lot of people will call it the fair value gap. It's widely taught. It's a 3-candle formula where you have a candle here, you have a gap candle, and then you have another candle established, and this middle candle with the wick here and the wick here establishes the inefficiency gap. Now, again, this is very popular, but the problem with this doesn't mean it doesn't work. When 3 candles do this, yes, it does create an inefficiency gap. Cool. But if you don't have 3 candles, there's also other ways to track inefficiency, which is extremely important to do, and a lot of traders completely miss it. They don't even know to do it this way. This is what we call the group inefficiency model, which is something we've popularized at Trade ATS. So the group model takes into consideration a bunch of candles and looks for subtle separation throughout the group. In this case right here, you can see that this candle is not touching this candle down here, which creates an inefficiency through 3 candles. Again, much more subtle, but just as important. Now let's go just a bit deeper on inefficiency tracking, because I really want you to see just how powerful this model is. Right here, we're gonna be tracking the price. I'm gonna show you how to do that. So right here we have these candles, And it goes back to what I told you in the last segment. How do we find inefficiency? We look at the current candle or the last candle that's closed, and we find which candle it didn't overlap, and we mark the center price. So right here, we can see that this candle did not touch that candle. Therefore,
so guys, so this video is clearly for you who really want to make trading a career. So before I get started, welcome to Trends Finance, and once again, it's your very instructor, Stephen Ibrigademo, on this one. This is my very mentor. This video you're watching right now, I just displayed on the screen, is very profound to the system I use in trading. When I started learning trading, I have never found any information as helpful as what you're seeing right here. As a beginner trader, there are a lot of challenges you have to come across, and understanding how the market works is one of the biggest challenges that you would face in the first 5 years of your trading career. And if you want to really make it right, I would want you to follow this guy. With Guth is his name, Trade ATS. So if you have to get more information on how the banks and the institution operates, you want to follow this guy. It gives you the entire secret and undiluted truth. The only challenge you'll be having is understanding that trading can be a career, a long-term career. But why I'm also expressing this, I just want you to know where it all started from. And I have won trading competitions using the same system. I have made profits from the market. And just so you know, there are some other things you would learn as time goes on. But this is going to be helpful, especially when you're starting out with Trade ATS. So once again, guys, like I said initially, it's your very instructor, Stephen Ibrigademo. You're welcome to Trade ATS. I'm hoping to see you on the next one.